Joining me now in studio is Jordan Toy from Legacy Family Wealth to give us his take on the latest movements in the markets. Jordan, thanks so much for your time this afternoon. So really a busy day. We've seen markets at the beginning of the week quite choppy, but it seems like today we might see some more movement coming through earnings and the Fed's rate decision, as well as those GDP figures under the spotlight today. Let's start off with the Fed. Now, we saw the dollar snapping 4 days of gains as some caution has returned to markets, with many analysts pricing in a hold from the Fed come 8 p.m. this evening. What are your expectations?
Yes, so definitely a busy day today in terms of financial data, and a busy week in general. I mean, we've obviously got US earnings season well underway. But just on the FOMC, so we look at a metric, Fed's funds futures, which is basically just gives you, ultimately the output is a probability of a cut. And we're looking at that sitting at 98% probability that they will hold rates today at the FOMC meeting. So largely expected. And I think when we have expectations pricing in such a high probability of no movement, that the focus is going to increasingly shift to the press conference afterwards, what Jerome Powell says in that press conference, as well as the FOMC statement, and to see, is there a one sentence change, because often the majority of those statements stays largely intact. So I think the focus is increasingly shifting to that. We know that there's significant pressure and sort of politics at play in terms of what's going on at the Federal Reserve. And I mean, just my take on that, I thought what was quite an interesting aspect to it is, you have this increasing pressure from the White House to cut rates, but and largely that's falling on the chairman Jerome Powell's shoulders, but he's not the sole determinant of where rates go, right? It's a big committee.
There's a whole team of policymakers.
Exactly. So even if the White House decided to fire and replace the chairman, and let's say, for example, a political appointee goes in there who's largely going to follow Trump's instructions, you still can't influence. You can maybe influence the rest of the committee, but you don't solely. One person doesn't solely decide rates, and I think that that's the entire point of that committee, is that there's opposing views, and we're likely to see that today. So 2 specific FOMC members we're going to be keeping an eye out for to see if they sort of dissent against the hold today and vote for a cut instead. Because in the past we've had 1 or 2, or rather 1 member vote against that, and we'll see if there's 2 today. I don't think it's likely to move the needle, but it is something that you don't see that often in terms of, or that recently, that there's some dissension amongst the committee.
And just on the back of your thought there around who would replace Jerome Powell, I was reading a note a few weeks ago, and the analyst had mentioned that a lot of analysts actually hoping that the person that replaces Powell is openly Republican, because then they can then figure out what could possibly happen because of the team in itself. So you already know where the incoming chair would go, but you also know that the members would probably vote against that. So then it kind of balances itself out in that sense. Let's move over to some earnings coming out today. We've got big earnings from Mag 7 companies, Microsoft as well as Meta. Microsoft, I see that there are expectations that the cloud business will continue to boost earnings. Meta, in the meantime, what's been interesting from them over the past few months is the talent wars that's been playing out, and how they've been poaching a lot of employees from OpenAI, I think, and Apple as well. So on the back of that, do you expect to see increased capex from them? And maybe then we can go through your expectations of Microsoft's earning coming out today as well.
Well, I'm glad you mentioned capex, because I think it's something that we're keeping a close eye on. We know that it's a key focus for some of these sort of big technology companies, being the likes of Google, Microsoft, Meta, as you mentioned, as well as Amazon. Google obviously is spending sort of an additional 10 billion over and above what they initially planned on spending. So we're not seeing that large amount of capex start slowing down, really. If anything, it's accelerating. So that'll be key, right? We'll have a very close eye on that out of some of these big cloud providers this week. Interesting that you mentioned Meta. We know that they're spending a lot, not necessarily on building data centers only, but also on, as you mentioned, the talent wars. So certainly I think a good time to be an AI developer, an AI executive.
Listen, I'm thinking of changing careers.
Yeah, we're in the wrong career apparently, but they continue to spend in the space, and I think Mark Zuckerberg's been very vocal on that, and a lot of these other executives, that they are happy to spend money hand over fist now, because if they believe that this is the future, they want to have that infrastructure in place to be able to facilitate a lot of these AI applications. So, we've seen good results so far. So US earnings season, I think when we were looking at it recently, about 80% of companies have beaten to the upside based on expectations of what their earnings would look like. So we'll see if that continues this week. I think it's key, right? These are some of the biggest companies in the world that are now reporting this week, and still some to come. But that'll be key. Do they continue this trend of this earnings season largely beating expectations, or do some of them start to buck that trend?
Let's move over to some earnings on the local front. AECI out with numbers. Profits more than doubling on that front, and they've cited a strong showing from their international operations. Just your take on those numbers.
So yes, naturally a South African business focusing on explosives, chemicals in the mining space, as well as some other areas. I think two of the key takeaways, and I mean, you've touched on some of the key points there. Revenues were down, but you had EBITDA up quite strongly, so clearly some good cost controls going on inside the business. So that was one of the key takeaways for me. Naturally that feeds through to, we've got good earnings per share and headline earnings per share numbers coming out of the business. In terms of the divisions, we saw a little bit of weakness out of the chemicals division specifically. The mining division is largely still the core of the business and brings in a lot of that revenue. So something to just keep an eye on there in terms of the chemicals business. Can they start to improve margins there? And I know management did mention that is a focus for them going forward. The other key takeaway for me was the large reduction in debt. So they have been selling off a lot of these, I believe they call it their managed businesses division, and they've sold off a number of these businesses, and I believe the management's stated aim is to continue to exit some of those businesses that, if we can call them non-core, to focus on their really core operations. So a lot of those earnings being, or rather revenues from, sorry, not revenues, but some of the cash that's come into the business from these sales being used to reduce debt. So I mean, we saw gearing reduce from around 40% to 25%. They've slashed 2 billion off the top line debt number. So I think that's quite positive. Management's keeping debt within a very comfortable range. We saw some positive developments in the international operations. So I think all in all, a decent set of numbers. And like I said, most importantly, I was quite pleased to see that revenue's down, but EBITDA is up quite strongly.
All right, let's hit pause on the conversation. Let's take a moment now to touch on what counters your industry peers are watching closely.
A corporate action opportunity at ATCO Ingram. So last week, Natco Pharma announced an offer, a firm offer to buy ATCO Ingram shares at 75 Rand a share, and the company will then delist. And when you have a corporate action like this, a special situation, you have two big questions to answer. Number one is, what is the probability that you will get this amount of money that's being offered? And number two is, how long will you need to wait before you get the money? Now, on the probability of the deal being done, I think it's a very high probability, because they're not buying control, they're just buying 35% odd. And that means it does need to go to the Competition Commission. It's not regulated by the JSE. It's only a takeover regulation transaction. So my expectation is in the next 3 months, 4 months maximum, definitely before the end of the year, it will be wrapped up and you will have your 75 Rand. And you might get a dividend. Because it's a minority buying in. It's not as if Bidvest are going to stop ATCO from declaring dividends. So hopefully we can squeeze out one more dividend before ATCO Ingram delists. And then on the timing, like I said, 3 months, 4 months maximum. So between your 75, maybe a little bit extra, and 3 months to go, you get a very good annualized return. If you buy the shares at 69 Rand, or let's say under 70 Rand. So that's why ATCO Ingram is my pick.
We're talking about property companies, and stock pick is locally listed. It's Sirius, but not a local property company. They've got some operations in the UK, but most in Germany. Extraordinarily well run, decent set of results recently, and I think with Europe, there's growth potential, not necessarily because the company's going to start exporting madly and things like that, but I mean domestic European growth, and specifically Germany, on the back of just state funding for private enterprise, led by weapons manufacturers. And let's face it, if you believe that the US tech sector is going to do well, by default, you must believe Europe is going to do well because guess who's going to buy all the US services? So in that respect, Sirius is very well placed.
So Sirius Real Estate as well as ATCO Ingram. Just your take on those counters, Jordan.
So I'm glad on ATCO Ingram, I'm glad your guest mentioned the transactions. Obviously very relevant for the share at the current point in time, with it being up around 37% since July, which I think is a great example of an event-driven strategy, right? Or an event-driven investment strategy, as opposed to being a long-term investor in the share. And your guest summed up the key points, right? Does the transaction go ahead, and how long do you have to have funds invested before you see that return? I think, without touching on the key points, which has already been summed up really well, I think my takeaway from this, at least from the transactions perspective, is, it's sadly another company that's probably going to delist from the JSE if this transaction goes ahead. And what are the implications for us as local investors in terms of the breadth of companies we have to invest in? Fantastic if the transaction goes ahead and you're an existing shareholder, but I think my takeaway as someone who's managing investments is it's one less opportunity or optionality that we have when managing client funds. On Sirius Real Estate, again, I think a good summary of the business as a whole, largely offshore. And I mean, we see it with a lot of our local property companies now. And I think my view on that is it's largely a byproduct of South Africa as a whole, right? Property or office, retail, you're not going to be setting up new businesses or taking up new storefronts if the economy is not really growing and spending's not going anywhere. So I think on the balance, you're seeing a lot of our property companies looking elsewhere for opportunities. If we look at the returns for the sector as a whole, property, and Sirius included, has done really well. If you look at over a sort of a 1, 3 year, maybe even the 5 year time horizon, property share prices have done phenomenally well. However, if you zoom out a little bit further, a lot of these shares, Sirius included, are still down on sort of their pre-COVID levels. So longer term shareholders are still largely in the red, naturally depending on where you bought the share. So an interesting sector, I think not one that we have high levels of conviction on, simply because there's a vast difference between investing in Eastern Europe versus Spain and Portugal, which some of our other property councils are in. But certainly a good South African business all in all, I think, and largely a sector leader in that space.
All right, let's get your pick before we wrap things up.
So I wanted to talk about Visa today, largely because they reported earnings yesterday, so I think quite a relevant story to cover. I think it's less of an exciting growth stock, but a very established, mature company. I mean, an absolutely massive business that is critical to sort of how the modern world functions in terms of payments, etc. We saw revenues up strongly, earnings up strongly, beating analyst estimates. But what was interesting is, you would think, the share price should be up pretty strongly off the back of beating expectations. But you have a little bit of forward guidance that disappoints, and I saw the share was sort of down 1-2% in the pre-market. I think a key risk to note with Visa is the adoption of sort of what does payment systems look like going forward? Because the way that it's been done the last 20 years might not be the way it's done for the next 20, 40, 50 years. So that's something we keep an eye on with Visa. How switched on are they to where sort of payment networks are heading? And I mean, we saw the CEO on their earnings call talking about, they are applying a lot of innovation in sort of the AI space, but more importantly, are they aware of the risk that blockchains or stable coins place to their fundamental business? And it's something that they're actively looking at, especially with the Genius Act being passed now regarding stablecoins. Visa's actively investigating, all right, do they come up with their own branded coin? So I think whether that pans out or whether that ends up being the sort of future of payments is less relevant to the fact that Visa, for me, is constantly looking at these risks. It's not just a case of sit back, all right, we dominate global payments, and so we'll carry on doing that. I think that's key, is that they are aware of the risks and are, using their dominant position to take advantage or to make sure that they're ahead of the game in that space.
All right, let's leave it there, Jordan. Thanks so much for your time and joining us in studio this afternoon. And that was Jordan Toy from Legacy Family Wealth.